Hello everyone, I am Sudip Chakraborty and I am a teacher, trainer, entrepreneur and a YouTuber. Today's topic of discussion is profit, its concepts and accounting treatment. In simple sense, profit is equal to revenue minus expenses. Revenue is the total cash inflow of the business, whereas expenses refer to the total cash outflow of the business. But before understanding the concept of profit, we need to understand the concept of different activities through which business earns its revenue and incurs expenses. There are three types of business activities. Number 1, operating activities. Number 2, investing activities. And number 3, financing activities. Operating activities are the principal revenue producing activities, or we can say these are the primary source of revenue for the business. These are the regular activities or the day-to-day activities which are performed by the business. For example, sale of goods or services, payment of salaries, etc. Investing activities are the activities which are related to wealth creation, asset creation, or value addition for the business. For example, purchase and sale of fixed assets, dividends received. Financing activities are the activities which are related to raising of capital for the business. For example, taking a loan is a financing activity and also the payment of its interest. So we can say revenue earned through operating activities is known as operating revenue. For example, revenue earned through sale of goods or services, whereas the revenue earned through non-operating activities such as investing and financing activities is known as non-operating revenue. Similarly, expenses related to operating activities are known as operating expenses. For example, office and administrative expenses, selling and distribution expenses, discount allowed, interest on short-term debts, bad debts, and expenses related to non-operating activities are called non-operating expenses. For example, interest on loan, donations, loss on sale of fixed assets, loss due to theft or fire. Thus, we can say revenue is of two types, operating revenue and non-operating revenue, and expenses is also of two types, operating expenses and non-operating expenses. Now, if we talk about profit, the profit is of three types, gross profit, operating profit, and net profit. Gross profit can be found out from trading account, and the formula is net sales minus cost of goods sold. Net sales means sales minus sales return, whereas cost of goods sold is equal to opening stock plus net purchases plus direct expenses minus closing stock. Net purchase means purchase minus purchase returns. For operating profit, we have three formulas. You can apply any of them depending on the question. Formula number 1, gross profit minus operating expenses. Number 2, net sales minus cost of goods sold minus operating expenses. Number 3, net profit plus non-operating expenses minus non-operating incomes. For net profit, we have two formulas. Again, you can apply any of them depending on the question. Number 1, gross profit minus operating expenses minus non-operating expenses plus non-operating incomes. Number 2, operating profit minus non-operating expenses plus non-operating incomes. Remember one thing, between net profit and operating profit is used to actually measure the financial health and performance of the business, because operating profit takes into consideration only the revenues earned from operating activities. It does not take into consideration the revenues earned from non-operating activities. And operating profit and net profit is found out by preparing profit and loss account. So that's it for today. If you need slides regarding this video, then mention your email ID in the comment box and don't forget to subscribe the channel. Thank you.